Okay, 16, 17 points lower on the Nifty. You're with us here on Trading Hour. Take a look at what's happening across the board. There is a bit of softening which is being seen. ICICI Bank is at about 359. So it's, about 5 or 6 rupees off the highs. There is Yes, which is off the highs by quite a bit. I mean, 201, 202 on Yes. I think even Axis has come off a little bit. So that's what we have. Mid-cap and small caps are doing okay. They're doing better than the Nifty like yesterday. And banks and financials, both public and private, are still the best performing indices in the market. What's happening in the commodity space? Manisha is here with just that. Manisha, morning.
Thank you so much for that, Prashant. While, of course, we will continue to do the countdown up to budget, but there's just so much happening in the global markets that you have to keep an eye on as well. Well, to begin with, it is the US and China trade talks that begin in Washington today. And it's the second straight day of the Fed policy, while, of course, the policy itself is expected to be a non-event. But the Powell statement or the press conference in the evening could actually be market moving. And then, of course, there are those trade tensions continuing with China really looking to triggering a legal process really for WTO to hear the challenge is on the US tariffs, and then US filing host of criminal charges on Huawei, as we have seen. So with this kind of a background, what kind of trade talks would US and China do is something that has led to a lot of uncertainty. We have seen the gold and silver prices continue to rise. The gold is trading at an 8-month highs now, and the decline in US dollar continues to support those gains. To talk further on that and also on the industrial metal space, we are now joined by Jonathan Bharat of Probus Securities. Jonathan, hi, good to have you. Gold prices first, and while of course the global background is benefiting the gold prices to gain up, what is your sense? Are we in the bullish territory? Do you see further gains? Are we looking at 1320, 1350 kind of levels in this rally itself?
Manish, good morning. Look, I think gold has certainly benefited, there's no doubt about it, over the disruptions that we're seeing in the tariffs. But more importantly, I get a sense it's been dragged up by palladium. And when I see the palladium price and the way it moves, palladium seems to be leader and gold and silver seem to be dragged up as a result. Remember, in palladium, we do have quite a deficit in supply there of close to 1 million ounces. So I think whilst that market remains bid, you'll see that it'll drag up gold. Gold is also going up by its old means concerning the issues we have in the trade wars and other geopolitical risks. But I think the major reason is on the palladium market, which is dragging it higher.
What is your sense on the kind of cues that we are working with right now, whether it is between US and China, China looking to review new draft on the foreign investment law? There's plenty to watch out for. And then there is the US non-farm payroll data on Friday. We have seen the US dollar weaken ahead of all of these. Do you think that's yet another factor which has led gains to gold?
Yeah, absolutely. I think the US dollar in itself is a major factor. We've always seen that nexus between, but when you look at the current macros, a weaker dollar is supportive. Where it used to be the major leader, I think we have other issues involved in the market, which is keeping gold better bid. And when you look at the current price action, I can see going higher. When you look at that, the low 1170, 1180, and you look at where we are now, then I think if we can sustain the current level for any couple of trading days, well, then I think you've got a good 3 to 5% gain on the top side.
But Jonathan, also, what's your sense on the industrial metals? Because we've seen the iron ore prices just go through the roof. 10% up is how they were trading yesterday for the lower grades, at least 5% up for the fine iron ore as well. Yeah. Nickel is trading at a 3-month high. China is looking to increase stimulus measures. How have you seen the industrial metals as a sector?
Well, we've been quite bullish in industrial metals. The Belt Road economics, I think, certainly swings in favour to buy on any dips. When you look at the copper market, we're still expecting a deficit this year in terms of its supply. I think at the end of the day, a lot of people have focused on the trade tensions, but I sort of feel that we will get a result of some sort. So I'm looking at the fact that we always will get a result, and I have to go back to supply-demand economics. And in terms of that, when we have a supply and increased demand for copper, then up she goes. Obviously, iron ore is helping the whole complex. Some pretty aggressive moves there. Looks like Vale might lose about 20 million tonnes of high grade, and as a result of that, we're seeing the high grade go bid. More recently, the lower grades playing catch up. So I think the key is how the government will react to the Vale licences given the disaster that we've seen. And if that's negative for any period of time, remember Vale is the largest producer there, so that will have a big indent in the market, and prices for the foreseeable future for iron ore, I think, will remain bid.
Okay.
Okay. All right, Manisha as well as Jonathan, thanks very much for joining in and bringing us all of that perspective. Well, let's get in a technical check now. We have Ashwini Gujral joining in at 11:30 a.m. to tell us what his strategy is. Ashwini, hi, over to you. First, wanted your thoughts on a couple of these vulnerable counters such as DHFL, which is down around 6% odd. There's some fresh wave of buying which is coming through for that counter. How would you approach that one?
See, basically there are some stocks in the market which are now in a free fall. I think DHFL has broken the lows it had hit, in the worst of the crisis on NBFCs. So my sense is that it should keep on moving lower, and maybe 100, 120, those sort of targets could come in. It's in fact one of our calls as well, but before that, the market is showing fairly poor momentum. I mean, today was a good day to show some sort of strength and rally, etc. But again, we could not even take out the first port of call, which is 10, 700, 720. So that way, this downtrend seems to be fairly strong. And, it looks like whatever happens on the budget or vote on account, etc., we should finally be heading lower. So that way, the market overall is not positive, and hence anything that is in trouble will go down further. Today, the problem is that, HDFC Bank, Kotak, even after falling for 5 or 6 sessions, are coming off very strongly, and it smells of a bit of international selling, maybe institutional selling, and it appears that sooner or later we'll break through 10,600 thereabouts, which has provided support. So the better or the more significant call should be on the downside. Dewan Housing is a sell with a stop of 165, target of 150. India Bulls Housing is a sell with a stop of 678, target of 655. And VIP is a buy with a stop of 465, target of 490.